Hello, good afternoon and welcome to this afternoon's webinar. My name's Jackie and this afternoon we're looking at running reports for VAT reconciliation. This session is a little bit of a hands-on session, so we'll be asking you to join in today. We'll confirm there is no judgment and we won't be sharing the answers, so don't worry if you get anything wrong. Please do try and take part though today. First of all, do some housekeeping. So you have been placed on mute, and that just means you can't speak to us today. But if you do have any questions or you want to take part in the interactive parts of today, then you can use the questions panel. So the question panel is the icon that looks like a speech bubble with the question mark in the middle there. There is also a handout, so if you want to take a copy of today's handout, then please do so. It's the icon that looks like a document with the folded corner there. Okay, so this is what we're going to do. First of all, we're going to do a really quick poll, and that poll is just to find out what schemes you're all using at the moment. And then we're going to move on to looking at the drill down function, and then we're going to look at the two sets of reports, so the detailed VAT report and the day books report. And we're going to go through any reconciliation of differences there as well. Like I say, if you've got any questions, please do pop them through to me throughout the session. Don't feel you need to wait till the end. We'll try and answer as many as we can on the way through, but I am on my own today, so don't have any support team in the background answering questions. So I'll try and pick up as and when I can. Okay, so first of all, I am just going to pop a poll across then. I do just want to find out from you what VAT scheme you're using. So that poll should be appearing any second on your screen. Just asking you what VAT scheme you're currently on. Now there is a little bit of a delay on the poll, so we'll just wait a moment for your responses to come across. Give it a moment or two. Okay, got them starting to come through there. Okay, so looks like the majority of you are on standard. We do have a few on VAT cash accounting and a very small portion on partial exemption. So today we are going to be doing this on a standard company. The reports I'll show you are standard. However, I will show you where you can find your reports if you're on VAT cash accounting as well towards the end of the session. But all of the principles again are very much the same, regardless of what scheme you're on or whether you're in the UK or Ireland. Okay, so this is one that will be fitting for all schemes. So let's have a quick close down on that one. So I'll just quickly share that so you can see the results of the poll. And then I'll just pop back onto the slides there. Okay, so the first thing we're just going to talk about is that drill down feature. So the first thing you'll need to do when you do your VAT return is to check your figures. And you can do that using the drill down feature. Now the drill down feature is one that sometimes gets missed. Many customers don't realise the feature is there, but it allows you to drill down into each box on your VAT return to see how that figure has been calculated. Now it's also useful for working out which reports you might need to run as well, which is what I'm going to sort of show you today. What's great with this is it allows you to drill down into the different transaction types and also the different tax codes that impact that particular box on the VAT return. Not only that, though, it goes right down to transactional level. So if you drill down even further, it'll take you to the list of transactions that make that figure so that you can export that to Excel and dig down a little bit deeper. So I'm just going to bring my data across. Just bring it over. Apologies here. It's because I've got a report open. And I'll bring this one across for you. So when we're in the drill down, I'll show you where I mean. So I'm going to run my VAT return first of all for October to December. Now I have already got a backup of my data, so don't worry about that, but I would always recommend, even if you're just calculating the return, just to take a backup of your data. So I'm going to pop into calculate for those 3 months. And I'm going to include this, which is a late entry that was posted at the end of September, which I need to include in my VAT return. And these are the drill down options I'm referring to. So you've got one on most boxes. The ones you don't have them on are those calculation boxes. So for example, if I go into box 1, very quickly bring this across, you can see there I've got it broken down into service invoices or sales credits, receipts, journal credits. So those transaction types are impacting my box 1. So that becomes very helpful when we're looking for what reports to run. Okay, so if I'm looking to reconcile the figures of box 1, I need to click on the drill down, and that shows me there that I need to run a report for my sales invoices, a report for my sales credits, reports, and I will say reports because there is 3 of them. Not always do they all have information on them, but we do have 3 reports for receipts and also a report for journal credits. So essentially, to reconcile that one box, we do actually need to run 6 reports. So yeah, it's not always a very sort of straightforward process. It can take some time, so definitely put time aside to make sure that you're happy with your figures. So just pop back to the slides there, and this just shows you the drill down going right down to the transactional level so that you can export it to Excel if you want to, and you can also print a list, which might also help you with your reconciliation. Okay, so let's actually get into the reports that we need to be running for these. So to reconcile your report, we have suggested reports that we recommend that you run in order to reconcile your VAT return. You might have different reports, your accountant might have different reports, but these are the ones that we suggest that you run. Just going to make sure that the screen's all sharing there. So the first one we recommend is the detailed VAT report. And the detailed VAT report is very much that. It is quite a lengthy report. It obviously depends on how many transactions you've got in the software, but it is detailed in that it will break down each box of your VAT return by transaction type and by tax code. So this can be quite a lengthy report. Probably wouldn't suggest that you just print it. You maybe want to save that first. So you can do this within the VAT return, and I'll show you that just now. Back into our data set. So you need to have calculated your return, and within the calculated return window in this reconcile part here, we have the option for reports, and this holds all of the reports that you will need for reconciling your figures. We do not click on reconcile until we are 100% happy with the figures there. So the detailed VAT report that we're going to run can be found in print VAT return, and in here it's the detailed one. So I'm going to untick this standard one and go into detailed. I'm going to click on run to preview. And what you'll notice there is it did not ask me for a date range. Okay, so it runs this report based on the VAT date range that you entered when you started to calculate the VAT return. And like I said, this breaks down per box. So you can see we're starting with VAT box 1, per transaction, per tax code. So the next section here is still box 1, but this time it's sales credits on a T1, and then it's receipts using a T1. So as you can see, the more tax codes you use, the more transaction types you use, the sort of larger this report may be for you. So this helps us to see every single transaction that's been picked up on that VAT return. But we need to run a set of reports to compare that with so we can reconcile our VAT return. Now, I'm not going to save that. In fact, I am going to minimize this for just one moment because we're going to come back to that in just a moment. But what we do have is the option for reconciliation reports within here. And this holds all of the reports that you'll need for reconciling your return. Partial exemption will be slightly different because you will need to do calculations outside the software, but there will still be boxes on your VAT return that need to go through this process. So first of all, I'm going to click on reconciliation reports, and it opens up me a report window, which I'll just bring across again. And when I expand on reconciliation reports, immediately it gives me a batch of reports based on my VAT scheme. So mine's saying standard. If you're on VAT cash accounting, yours will be labelled for VAT cash accounting. So I'm just going to pop into here, and you can see it breaks it down into each of the modules in the software. And we won't need to use all of these. So for a VAT return, a standard VAT return, we're not going to use these intrastat ones. We're really going to be looking at bank customers, nominals, and suppliers. So let's just jump back to the slides for 1 second there. Okay, because we're going to be running the daybooks reports, and it shows you there where to find them. And this diagram here is going to show us how we can use the drill down functionality to help us determine what report to do. So we're going to be looking at box 1 today, okay? Everything we're going to go through today can then be applied or amended slightly to the other boxes, but it's the same for box 6, box 4 and 7. You'd obviously be looking at supplier transactions rather than customers. So for box 1, we need to run a daybooks that shows us sales invoices. So for that, we've got the daybooks customer invoices report. We also need to run the daybooks customer credits. We need to run the daybooks bank receipts, cash receipts, and credit card receipts. Now, you probably will have something in bank receipts. Cash receipts and credit card receipts aren't as commonly used. Okay, so if you do get something to say the data, it didn't return any data, that's fine, don't panic about that, but do still generate the report just to make sure something hasn't been put through. And then finally, we've got the daybooks nominal ledger. So we're going to actually do those 4 reports now, or 6 reports. I know two of them won't work. We're going to do those, and we're actually going to try and reconcile box 1, okay, and compare them against one another. So we're going to start off with sales invoices. So if I just go back to the data again and into here, another way we can decide what report we need to run is to use the VAT detailed report. Okay, so whichever one works for you. So I've printed the VAT detailed report, and basically I'm just going to start at the top. So we'd start at this section here, which is VAT box 1, sales invoices. So immediately that tells me I need to run a report that shows me sales invoices. So we're going to do that. Just going to minimize that for a moment. So we're just going to go back into the reconciliation reports, expand on here, expand on my VAT scheme, and we're going to go into sales invoice reports, which would be held in customers. So I'm going to go into customers, and in here, this is where it differs slightly. If you're on version 30 or 31, you will have a report called Daybooks Customer Transactions. If you're on a lower version, what you'll have is daybooks, and then you'll have the option for customer invoices, customer credits. What we've done in version 31 is we've actually consolidated some of these reports. So it's actually now one report, but what we do when we use this report is we immediately tell it what type of transaction we want it to pick up. So slightly different, but you're going to get exactly the same impact. So I'm just going to run this for invoices and leave everything else unchanged other than the date. So this is where the really important thing we need to do is run this for the same date as the VAT return. So I'm just going to pop in the date range there. And OK. And that's run the report there for me. So this shows me all of my customer invoices posted into my account software in that given time frame from the beginning of November to the end of December. Now what I'm going to try and do is bring those 2 reports together on the same screen there. Bear with me. See if I can get them on the same screen. If not, I do have a backup plan available. So I'm just going to pause my screen for 1 second while I maybe get that backup plan up and running. I did save them earlier. I think I did close a few things down also at the same time to try and make sure I had a smooth running session. There we go. They are there. Okay, I'm just going to minimize this. I will reshare my screen just a moment. You probably can't see what's going on. Just want to streamline my view. Okay, so this is the first part of interactivity here. I'm just going to bring this back in just a second. There we go. I will reshare the screen for you. Okay, so we're comparing the top section on the detailed report here with the Daybooks customer report. So I'm just going to try and zoom this one along. Just zoom out there and bring this one back up there. So what I'd like you to do is I'd like you to have a look at these two reports. Just trying to get those right on the screen for you. I just want you to look at these two reports and see if you can sort of identify any differences. So what we're trying to do is we're trying to obviously see the similarities, but also work out if there's any differences between the two reports. So we've got the Daybooks customer transactions for invoices. So we're comparing this section here with this section here. So it's just this small section on the detailed report. And I want you to see if you can find any similarities, differences, and if you can account for why. Okay, so can you let me know why there's a difference? And I'm just trying to get enough information on the screen there so that you can see both of them, and then I will stop moving around there. So this is where you can use the chat panel if you can, just to pop your sort of suggestions across as to what's going on there. Just going to quickly expand that chat so I can see that for you, just in case anyone's got any queries or if there's anyone wants to give a go on this. So there is a delay as well, so it does take a little while. So can anyone identify anything that's different between this section here, which is just that very top section, and the report that we have on the right hand side, which is the Daybook customer invoices? I will give it just a few more seconds before I jump in. Okay. I normally start talking and then all the answers start to flood through. Okay, so on the VAT report detailed, and there you go, someone's answer has just come through. Item 1 is missing, probably earlier unreconciled. So absolutely. So that's the first one, absolutely. So on the VAT report, we have at the top got the wording to say include earlier unreconciled. So when I calculated the VAT return earlier, I very quickly said I'm going to include this and included the transaction. Now I didn't want to linger on it too long because I didn't want to try and give the game away. But basically that is an earlier unreconciled transaction. So our VAT report has the ability to look back in time for anything that's unreconciled but should be reconciled. However, the Daybooks doesn't have that ability. Okay, so the Daybooks literally will look for the date range you specify, and that is it. So that is a late entry. Okay, so that's not going to pull through on the Daybooks reports. So all we need to do at this point is just establish with ourselves, is that a late entry? Is that genuine? Is it a transaction we've popped the wrong date on by accident? If it's something that needs amended, we need to come out of the VAT return, make the amendment, and then recalculate the return. If it's something that's genuine, so it is a genuine late entry, then we can leave that alone. We can leave that be. We just need to know that that is the reason why there's a difference between the two reports. Next one is item 6. So we have item 6, which shows on the VAT report, the Daybooks customer report, but does not show on the VAT return. And quite rightly, as someone has guessed, it is because of the tax code on there. So if we look at number 6, it's tax code T0. What we're looking at here is VAT box 1, sales invoices using a T1. Okay, so there's no VAT on that transaction. There's no tax amount there to show in box 1. Also, it's on the wrong tax code. But if we look a little bit further down to box 6, which is just down here, you can see it does pull through here for sales invoices on a T0. So it does pull through in the correct box there. So that's the first one. The next one we're going to look at is the customer credits. Okay, now there's no interactivity here. I think we'll be able to see quite clearly that we've got transaction 9 showing on both reports. So that's great. That's what we want to see. Both reports showing that transaction there. Now to run that report, I'll just backtrack a little bit this time, what we would have done. I'm just going to come out of this VAT report. In fact, I'm going to just save that and reopen it. I'll just be 1 second there. I'll just get that opened up so it's nice and easy to use in just a moment. There we go, that's better. So to run that report, I'll just pop back into the data there. If you were on version 29 below, you would come into customers again, and this time you'd be looking for your daybooks customer credits, running it for the same date range as the VAT return. If you're using the daybooks customer transactions because you're on version 30 or above, then this time when you run the report, you would just change the top drop down to say credits instead. So it would include those. And again, just making sure the date range matches the VAT return period. Now the next one we're going to run, if we go back into the VAT report, which I'm just going to pull back up now, this one here that I've just saved, we've done the credits. We're going to move down to the next section here, which is the daybooks receipts. So that's receipts using a T1. Now this isn't talking about customer receipts, this is talking about bank receipts. So money into the bank, not using a customer, just straight money into the bank account. To do this one, again, we go back into the bank reconciliation report, sorry, the VAT reconciliation reports. And this time when we're in our folder, rather than customers, we're going to be looking at bank. And we need to run each of the reports that has the word receipts in there. So there are 3 of them: bank receipts, cash receipts, credit card receipts. Again, we do it for the same date range. So that would be the 1st of October to the end of December. And I'm just going to do this on one of these ones just to show you what I mean by it not working. So just pop the date range in. You get that message. So if you get that message, it means you probably don't have any transactions that are a CR transaction, or in this case, a VR transaction. Okay, so what we're going to do is we're going to run this bank receipts. This is the one that is the most commonly used, and we're going to run that to match the same date range. So again, as if by magic, I'm going to bring back my ready-made reports. I'm going to bring them up on the screen a little bit better this time. So I'm going to look at the VAT, detailed VAT on the left-hand side, and I'm going to use the daybooks bank receipts report there. So again, this time, what I'd like you to do is I would just like you to compare the 2 areas. I'm going to highlight this now, which is a little bit easier. Now it's in here. We're looking at this section here in the green, and we're comparing it across to this report. So what can you see difference-wise? Is there any differences? And can you work out why there's a difference there? I'm just going to minimize that slightly. So have a look, see if you can see a difference between the 2 reports, and again, see if you can identify why. Okay. We'll just give it a few more seconds just to see if we can get the responses across. Like I say, there is a 20-second delay on here, so that always seems a lot longer when you're waiting for people to partake. Okay, so on the VAT report, we have 1 bank receipt. On the daybooks report, we've got 2 bank receipts. Yes, we've included reconciled, but this transaction here is quite clearly in the date range specified. But on the daybooks report, we've got the 2 bank receipts. And if we look at them, the reason is again to do with the tax. So in the tax column, there is 0 VAT. The reason being it's on a T9. So a T9 tax code is outside the scope of VAT. So this one will not be picked up on the VAT return. So again, at this point, what we'd be looking to do is check, is that posted correctly? Should it be a T9 or should it maybe be something else? Is it meant to be a T0? If it's on the right tax code, There's nothing else we need to do. Just know that that's the reason for the difference. If we do need to make the amendment, then you do need to come out of the return, make that amendment, and then recalculate. Okay, our last one. This is a tricky one. It's not a common scenario, and this is the daybook's nominal ledger. So I'm just going to quickly show you how to run this first of all. So back into the reconciliation reports. And this time we're going to run it into nominals. And this will show us all journals. So I'm just going to run that. Again, I'm going to run it for October to December. So the 1st of the 10th to the 024. Just added a few extra zeros in here to the end of December 2024. So again, matching the VAT return. And as you can see, that's brought me up with 3 journals. So I'm just going to pop back to the report again, bring them all back up for you. So what we're doing this time is we've moved down to the next section. So again, you can see here what we're looking for. I'm going to just highlight this area in pink, makes it a bit easier to see. So we're looking at the side there, where I've highlighted in pink, and we're comparing it against the daybook's nominal ledger. So can you see why there is a difference between the 2 reports? Like I say, this isn't always something that happens to everyone, but I do just want to see if you can work out why we've got one on our VAT report, and we've got 2 showing on our daybooks, sorry, 3 showing on our daybooks nominal ledger. Okay, give that a moment or 2 as well, just in case anyone does want to have a go at that one. Okay, so I'm going to start by explaining that for a journal to show up on the VAT return, it has to first of all be a VATable tax code. So the top transaction there on our daybooks is for 1,200. It's on a T9. Okay, so first of all, it will not show on the VAT return because that element is a T9. But also, another reason why that won't show in box 1 is because it's a journal debit. Okay, journal debits will not show in box 1. Okay, they cannot. So when I showed you the drill down earlier, I showed you the 4 transaction types. So we had invoices, credits, receipts, and journal credits. So unfortunately, the journal here at the top does not meet the criteria for meeting this box anyways, but it's also on a T9. We've got 2 journal credits, okay? So we've got 2 journal credits, but only one of them is showing here in box 1. And that is this one here, journal 12. The reason that there's 2 of them and only one showing them is to do with the nominal code. So journal credit number 11 is using a T1, so it will be picked up on the return, but because the nominal code isn't the sales or purchase tax control account, it's seen as a net element. Okay, so that will actually show in box 6 now. But because number 12 has used the sales tax control account, that is why it is showing on the VAT return in box 1. So it's very specific for a journal, in particular a journal credit to be picked up in box 1, it has to have a VATable tax code and use a sales or purchase tax control account nominal code. So that's a little bit of a niche one. Okay, scenarios, in particular the scenario that I've used to demonstrate this would be things like selling an asset, okay, or disposing of an asset. Okay, we're going to pop back to the slides now. So thank you for getting involved on that, because I do appreciate it's not always something that everyone's sort of comfortable with getting involved. There's absolutely no shame if you're not comfortable with something. And I'm just going to try and I do apologize, I'm having quite the nightmare with my mouse today. Just going to try and get this to work again. I think it might have unplugged. It does not want to play ball, unfortunately. I'm going to have to go back to the pad. So we'll just get the slides back on there. I'll be with you in just a second. Do believe my laptop has started its Christmas already there. So there we go. I will reshare the slides. Apologies for that. Okay. So a few of the slides have gone through those very examples, and they're explaining to you on these slides, what reports you need to run for each of these, and also how to reconcile those differences. So what you're looking for in terms of comparing the two different reports together. Okay, so reasons for missing transactions. One, earlier unreconciled transactions show on the VAT report, but not on the day books report. Remember, tax codes like a T0 and T2 will show on the day books, but will not show in boxes 1 or 4 if you're looking at suppliers as well. And T9 tax codes, remember, they're outside the scope, so they'll show on the day books report, but not on the VAT return. So box 4 is very similar. You'd be looking at doing day books supplier invoices, supplier credits, bank payments rather than bank receipts. And again, you'd run the same report for nominal ledger, but you'd be looking at the journal debit transactions only. So I did mention earlier around VAT cash accounting. So if you're on the VAT cash scheme, you can see that when you go into the VAT reconciliation reports, you get the option for VAT cash scheme instead. And you'll be running slightly different reports. So you won't be running customer invoice reports, but you'll be running things like customer receipts, customer refunds. So in the slides, I have actually detailed, just like I have for standard, trying to be as inclusive as possible here, which reports you would need to run there. So do take a copy of the handout because that will help you with that. Just got a couple of frequently asked questions that we do get asked on these sessions quite a lot. So the first one, and seem to have this more and more now because we have more and more things that sort of get in the way of this, is why is box 1 not 20% of box 6? And that's because not all tax codes have a 20% rate. Okay, it's become more and more common with things like the CIS domestic reverse charge, where we have things like notional VAT going on in the background. So it used to be a really common question when I was on technical support, but now it's even more common for it not to be 20% of box 4, for example, box 6, for example. And why do my VAT figures not reconcile to my nominal balances? So again, we do get a lot of customers who look at the VAT return and the amount owed to HMRC or the sales and purchase tax control accounts, and then try and compare that to the VAT return. And those purchase tax and sales tax control accounts are just constantly in use. They're always being used. So then if you're doing a return today and you've been processing for the last month, they're still going to have the last month's transactions in there. So we don't recommend to do that reconciliation. That's not how we recommend to do that. On VAT cash accounting as well, they never match because you'll have unpaid invoices on that nominal balance that aren't picked up on the VAT return until way down the line when they're actually paid. And how can I see my earlier unreconciled transactions? So you can actually do a report on those. So again, click on VAT report. One of the options is to print your unreconciled transactions. Okay, this is your opportunity for any questions you may have. So if you do have any questions, please do start to get them across to me. I'm just going to go through a quick summary and to talk about the next webinars coming up in January. So first of all, the drill down feature can be used to investigate how a box is calculated. So you can drill down to transactional level and you can export that to Excel. It shows you which boxes and how they are calculated based on which transaction types and which tax codes. Remember, the day books reports must be run for the same period as the VAT return. They will not pick up on previously unreconciled transactions, but your VAT return will. And if you do find a missing report, a missing transaction from either report, all you need to do is understand why and just check that that is correct. What these reports won't do, unfortunately, is they will not be able to identify that you've forgotten about a transaction, okay? It's just checking what you have entered has been entered correctly. There's lots of help and support, so there's lots of links in the handout there to our help centre. So if you are doing one of your first VAT returns, then there's lots of help and support available online. Okay, I'm just going to talk about the upcoming webinars. Just bring these across again. Just going to close that one down. Okay, bear with me 1 second. So if you go to sage.co.uk/help, that will take you to our help centre. This is where you can find all of our help that's available, but also you can type into the search box for webinars. So I'm just going to expand on that for you. So just show the screen again there. So if you type into the search box under Sage 50 accounts the word webinars, that will take you to our webinars landing page. This is where you can see all of our previous recordings. So if you have missed a session, we've got recordings available for you. I think we've got over 180 different topics on this. So there's lots and lots of content for you to catch up on. But we've also got our live webinars, so you can see what we've got coming up in the new year. We do have one final webinar tomorrow, and that is at year end tomorrow morning. And then that is us complete the webinars for next year. But we've still got lots planned for you in the new year. So we're going to come back with year end, and we've got lots of information on clearing out your data. So if you're thinking it's getting a little bit untidy, you'd like to do a bit of a spring clean, then join us in January. We'll talk you through getting your data tidied up. We've also got our next badge coming in February, so please do keep an eye out for that one as well. Okay, it's been exceptionally quiet this week, not just today, this week on the questions. So we have been finishing slightly earlier, give people time back. I appreciate it can be a very busy time for some. So with that, I will end the session there because I think we're all done with the questions there. So thank you again for joining us. We do hope we'll see you in the new year, if not tomorrow. But in the meantime, for now, thank you very much, everyone. Take care, and we'll see you soon. Bye for now.